The top 3 things that we find on bank statements that can create more work for you is IRS debts, collection account payments, and transfers. So an IRS debt, if there is one and we are unaware, but we discover it on a bank statement because of the payments coming out, we're going to have to follow up and ask you for a copy of the payment agreement that you have with the IRS. So that's going to entail a little more work for you. If we see any kind of collection account payments that are not showing up on the credit report, maybe it was privately set up, we're going to also have to ask you for more documentation on that and probably add it to your list of debts on your application. Transfers. If you're transferring money in between accounts on a regular basis and it shows up on the statements we are reviewing, oftentimes we're going to have to ask you where that's coming from or where it's going to. Depends on the loan program as to how nitpicky we have to be, but it could definitely trigger a little bit more question about those transactions and if it's potentially more income that you've got than what we're acknowledging, or if you have debts out there transferring money over to that we're unaware of. So bank statements can be a little bit of a pickle to deal with, and those are some of the top reasons why. So word to the wise, move your money a little bit less if you don't want to potentially have to turn in additional accounts when looking to do a home loan.